Hello everyone, and welcome from Taxplus Accountants. I'm here to walk you through the key tax and compliance changes from the UK Autumn Budget 2025, and what they mean for you as an individual, a landlord, or a business owner. Personal taxes, stealth freezes, and tax on investments, income tax and NIC thresholds. The Chancellor has not changed the main income tax rates, but has extended the freeze on thresholds. Personal allowance stays at £12,570. Basic rate band still up to £50,270. Additional rate still starts at, and so on, £125,140. These income tax and matching national insurance thresholds are now frozen from April 2028 until April 2031. Because wages will keep rising, but thresholds won't, more people will drift into higher tax bands. HM Treasury expects this freeze on income tax and NIC thresholds to raise over £13 billion a year by 2030-31. Dividend and savings income. The budget specifically targets income from assets, property, dividends, and savings to narrow the gap between tax on work and tax on wealth. From 6 April 2026, ordinary dividend rate rises from 8.75% to 10.75%. Upper dividend rate rises from 33.75% to 35.75%. Additional dividend rate stays at 39.35%. No increase here. From 6 April 2027, tax on savings income increases by 2 percentage points at basic, higher, and additional rates to 22%, 42%, and 47%. There will also be separate property income tax rates from April 2027. 22% basic, 42% higher, and 47% additional. Overall, these higher rates on income from assets are expected to raise about $2.2 billion in 2029 to 30. with around 2/3 of that coming from the top 20% of households. Pensions, NIC cap. From April 2029, the NIC's advantage on salary sacrifice pension contributions will be capped. Only the first £2,000 a year of employee pension contributions made via salary sacrifice will be exempt from national insurance. This is expected to raise about $4.8 million in 2029-30 and $2.6 billion in 2030-31. What this means for you. If you're a director shareholder or higher rate earner using salary sacrifice heavily, this change will reduce the NIC saving on large pension contributions. You may need to review your remuneration and pension strategy with us. Wages, PAYE, and payroll, national living wage. From the 1st of April 2026, national living wage age 21 plus rises by 4.1% to £12.71 per hour. National minimum wage rates also rise to £10.85. 18 to 20 and £8, 16 to 17, and apprentices. A full-time worker on the NLW will be around £900 a year better off, and about 2.4 million low-paid workers are expected to benefit. Impact on employers. This is a significant increase in payroll costs for labor-intensive sectors: retail, hospitality, care, and small businesses. HMRC compliance focus on payroll. The budget includes hundreds of millions of pounds of extra systems and compliance spending across HMRC and other departments to reduce fraud and error and support enforcement. Expect more scrutiny over PAYE accuracy, national minimum wage, and NLW compliance, construction industry scheme, CIS, employment status and off-payroll working, IR35, businesses, and corporation tax. Corporation tax rates. Main rate, 25%. Applies to companies with profits over £250,000. Small profits rate, 19%. Applies to companies with profits up to £50,000. Marginal relief between £50,001 and £250,000. If your profits fall between these amounts, your effective tax rate is between 19% and 25%. This creates a gradual increase from 19% to 25% instead of a sudden jump. Capital allowances. From 1st January 2026, new 40% first-year allowance for most main rate plant and machinery, including many leased assets and unincorporated businesses. From April 2026. Main rate strong writing down allowance falls from 18% to 14%. The existing 100% first-year allowance for zero-emission cars and EV charge points is extended to March-April 2027. R&D and tax gap measures. HMRC will introduce a targeted R&D advance assurance service for SMEs from spring 2026. A wider package of measures to close the tax gap is expected to raise £2.4 billion extra in 2029-30, bringing total additional revenue from compliance and anti-avoidance to £10 billion in that year. Property, landlords and wealth taxes. Property and landlord income. From April 2027, separate property income tax rates apply. 22% basic, 42% higher, 47% additional. This is clearly aimed at raising more tax from landlords and those with significant rental income, especially higher-rate taxpayers. High-value property charge. A new high-value council tax surcharge in England will apply from April 2028 to homes valued over £2 million, starting at £2,500 per year and rising to £7,500 for homes over £5 million. Fewer than 1% of properties are expected to fall into this new charge. Stamp duty land tax. No changes to the main SDLT rates for typical homebuyers and landlords. There is a strongly targeted SDLT relief for property transfers within local government pension schemes, not relevant to most individuals, and families' child poverty. Is benefits. Removal of the two-child limit, universal credit, a major welfare change. The two-child limit in the universal credit child element will be removed from April 2026. The government estimates this will lift around 450,000 children out of poverty, rising to about 550,000 when combined with free school meal expansions. Annual cost builds from around £2.4 billion in 2026-27 to just over £3.2 billion by 2030-31. The high-income child benefit charge threshold itself is not changed in this budget, so more families will gradually be brought into that charge as salaries rise. VAT and indirect taxes. VAT registration threshold. Budget 2025 does not change the VAT registration threshold, so it stays at £90,000. as set in April 2024. With inflation, more small businesses will cross this limit and be forced to register. Soft drinks industry levy. From 1 January 2028, the sugar threshold for the levy is reduced from 5 grams to 4.5 grams per 100 milliliters. And the levy is extended to milk-based and milk substitute drinks with added sugar. The government expects this set of changes to raise additional revenue and further discourage high-sugar drinks. Digitalization and e-invoicing. HMRC will invest £59 million in technology to use real-time digital prompts for strong VAT and corporation tax filing from 2027 to 28. All VAT invoices will need to be in a specified electronic format from April 2029, with an implementation roadmap to follow. HMRC powers crypto and international transparency. The budget continues to strengthen HMRC's ability to close the tax gap, including doubling late filing penalties for corporation tax from the 1st of April 2026, new rules to enhance tax transparency on real estate. This year, to enhance tax transparency on real estate, with the UK joining an international agreement for automatic exchange of real estate information from 2029 or 2030. Publishing responses on the taxation of decentralized finance and crypto lending, signaling more detailed rules for crypto and digital assets. Overall, government forecasts show additional revenues of around £10 billion a year by 2029-30 from tax gap and compliance measures. PHI, identity verification, very important for directors, separate from tax, but critical for compliance. From the 18th November 2025, identity verification becomes a legal requirement for all company directors and persons with significant control, PSCs. There is a 12-month transition period, but new directors and PSCs must verify straight away. Acting as a director without verification will become a strong criminal offense. For the individual and the company, PHI at Taxplus Accountants, we can guide you through this process. If you'd like a personalized impact review for your salary, dividends, rental portfolio, or business, please contact Taxplus Accountants on 0208 507 8033. We'll help you stay compliant, minimize your tax bill within the rules, and plan ahead for all these changes. Thank you for watching, and we look forward to supporting you through the new tax landscape.